Use this entry strategy to make the market always, anytime, any day. This is not about drawing support and resistance, waiting for breakout strategy, not at all. There are 5 major things I look at before placing a trade, and this has never failed me. I need to wait for number 1, number 2, number 3 to number 5 to play out before I enter the trade. And trust me, they show up almost every day, 5 times in a week. You want to watch this video to the very end so that to get the very details and the actual method that I used to apply the strategy for your own benefit. So do not skip any part of this video. I beg you, please make sure you watch it with your writing material. Should in case you see me for the first time, my name is Gordon Trade. I show up here daily, weekly, and monthly to document my Forex journey and to also help you become a profitable Forex trader. This is what will make Forex so simple. So you want to join us on this journey, make sure you like and subscribe to this channel and also turn on the post notification bell so that you get notified whenever I show up with banger video like this. So having said all this, let's dive right into this video, and I'm going to be showing you those 5 things I wait patiently to see play out in the market before I go in. And trust me, whenever I'm in with these 5 things being played out, 90% all the time the trade actually go my way. And it's a live trade running right now that I'm currently in. I'm going to be showing you how I use these 5 criteria to place that trade, and currently I'm in profit in this particular trade. So let's dive right in. All right, so here are my 5 entering trading criteria that I always watch out to see before I eventually planning of taking any trade. All right, and this is the right time you want to take out your writing material so you can get into business. Okay, number 1 that I look out for is my top-down analysis. Whenever you come up to your chart, you want to observe the trading environment. You want to know the market condition. All right, you want to know whether you should be buying that particular day or you should be selling. This will help you. Remember, the market always trend either up or down, all right, or sideways. So if we are in an uptrend, you should be seeing traces like this, right? Now, when you come to your chart and you've seen that you are in an uptrend, so that means you are looking for buys. Am I right? And in case you come to your chart and you're having a downtrend, you should know that that period you will be looking out for sales. So this is what I want to observe. Whenever I come to my chart, I want to know which market condition am I really in, so that will form my bias for that day. All right, so number 2 is top-down alignment. Good. After I've observed my number 1 and I've seen that we are in an uptrend, then number 2, I will now start plotting my key levels. That is when I will now start looking for my area of support and resistance. Sorry, before I go further, there's one thing I omitted in number 1, which is top-down analysis. Top-down analysis, you want to start looking at either from the monthly time frame or from the weekly or daily. It all depends on the type of trader that you are. All right, if as a day trader you want to start looking at the chart from either the daily time frame of 4 hours down to 1 hour and 15 minutes for your entry. Some even take 5 minutes as their entry. Or if you are a swing trader, you want to start looking at the monthly time frame down to 15 minutes for your entry. So that is it. Now on number 2, the top-down alignment. Why alignment? If the monthly and the weekly time frame and the daily time frame is telling me that the market is in an uptrend, so if I'm going to enter my trade, I should be looking for buy setup. All right, that is what we call alignment. I don't have any business looking for what sell. All right, because the market condition is what is in an uptrend. But if the top-down analysis is telling me that we are in a what downtrend, so I should be looking for what sell opportunity. I shouldn't be looking for what to buy, because if you do that, you'll be trading against the trend. I hope you are getting it. Let's follow the number 3 thing on my chart, which is POI. Now, POI means point of interest. Why is the point of interest? Point of interest is your key levels, those levels where price reacted to. All right, let's say this price has been reacting to this particular level of resistance, right? And whenever price gets to this resistance, what we have sell, right? So anytime price get back to this what level of resistance, I should be waiting to sell. That is what key levels. So anytime price get to this level of resistance, I should be waiting to what to sell. except when price breaks above it. That is what we call key levels. So what are my key levels? Key levels are levels where price touches and reacted to. All right. So whenever you are taking a trade, whether you're in a downtrend or uptrend, you want to look at those levels where price is always respecting. All right, those levels where price is always respecting. You know that the moment price gets to that level, it always bounce up. All right, price always reacts towards that level. So those levels are your key levels. These levels are your what? Key levels. And you can easily spot them on the chart. Whether you are taking an entry on the 15-minute or 1 hour, you should be able to plot those psychological levels. And these are what? Round numbers, where price always get to and react. Those levels that has multiple touch on the same line, they are your key levels. I'll be showing you on the chart as we move on. Once I've been able to plot out my key levels, then I'll be coming to look out for my number 4, which is my what? Chart patterns and candlestick formation. Good. Before you take a trade, you want to wait for your confluences, all right? Now, if I'm looking to take a buy on this market, let me say the market has been in a downtrend, all right? And I'm waiting to take a buy. So the price has gotten to my what? POI. Don't forget my point of interest. This is where I waited patiently for price to touch before I take a buy. So once price gets here, will I just go in for a buy? No, I need to wait for something to happen, which is what? My chart pattern or candlestick formation. So whenever I see it form here, then I can go in for a buy. And one of the things I'll be looking at for in terms of chart pattern is either what? A double bottom. Did you see that? All right. Or an inverse head and shoulder. Did you see that? An inverse head and shoulder, or chart or candlestick formation. All right. So if I did not see double bottom or inverse head and shoulder, I should be looking for what? Candlestick formation. Something like bullish engulfing candle, morning star, hammer, and things like that. So whenever I see them form, that is when my what? Confirmation has been complete. So once I see this happen, I'm ready to go in for my trade. And if I go in on the trade, I want to always see the 5th one, which is my what? Area of Excel, my stop loss and take profit. Now, where will I put my take profit? Let's say this is where the market got to, the price got to before we had a push to the upside. All right, now my Excel will just be below this low, this recent low. That will be my Excel. All right, below this recent low, because price may eventually come back a little bit at a drawdown before moving up. Then my take profit, will be my next area of what? Resistance. That is how you what? Take effective trade opportunity in the market. So by the time you wait patiently for this to play out, all right, your top-down analysis, your top-down alignment, your candlestick formation or chart pattern, then you wait and you also study to see your areas of TP and Excel. Trust me, all this will make you profitable. So you are not just coming to the market to just look for buy and sell. There are criteria you are watching out for. This is how you develop your playbook so that you can have an edge in the market to make money in the market. All right. So let me show you the current trade that I'm on right now. So now let's apply the 5 criteria on this particular instrument. This is gold on the monthly time frame. Remember I said top-down analysis. So let's start from the monthly time frame. What do you see? I want to look at the overall direction of the market. If I'm not getting the overall direction on the market on the weekly time frame, I can come to monthly to see where we are heading to. Now, on the monthly time frame, you will always see, you can easily see that we are in an uptrend, right? We are in an uptrend. So what did I tell you? In an uptrend, that is a buy market, all right? Now, weekly time frame, what are we seeing in the weekly time frame? We are still in an uptrend. You can see higher high, higher lows. We are still in an uptrend on the weekly time frame. Good. Then what about daily time frame? Now we are looking at number 2, which is what? Top-down alignment, right? Now on the daily time frame, we are still in an uptrend. Now on the daily time frame, I mark out areas where price gets to and rejects. Did you see price gets here? We have what? rejection. We have price reacting to all this level. Even though here, I didn't want to mark every point of my chart so that I won't get it messy, right? All right, so I came to the 4-hour time frame to come and wait patiently for price to return back to my POI. Remember I said POI is your point of interest. Whenever price gets here, what happened? There's a reaction. Did you see that? Whenever price gets to this zone, there's a reaction. Whenever price gets here, there's a reaction. So we have reactions here, here, here. Even here, did you see? We have reactions. And here too, we have reactions. So these are points of interest where you want price to get to, then you take opportunity. And what happened? Let me take away this rectangle. Now, the moment price got here, did you see what happened? We had a weak rejection. Let me take away this. So you can see price got here. We had a weak rejection to the upside. So this was where I waited patiently to take my trade. Now, I took this up trade on the 15-minute time frame. Good. Did you see that? So price got here. I took this trade. Currently, I'm seeing this setup, all right? This is my TP, and this is my XL. Now, the third entry, the fourth entry, which is what? Chart patterns and candlestick formation. So on this market, I didn't go in with chart patterns because I didn't see that chart pattern form. I went in with what? This bullish engulfing candle here. Did you see that? For candlestick formation, all right? Even by the time that happened, we still had opportunity to go in the second time because we had like a double bottom here. Did you see that? So this is how to take profitable trade in the market. You have like double bottom here. Then the price bounce off of that. So these are the things you want to watch out to see in the market. They play out, often play out. 5 times a week, they often play out. So the moment I saw this bullish engulfing candle, let me zoom out so you can see. The moment I saw this bullish engulfing candle, then I went all in. You can see my entry level. This is my entry. Boom. Then my TP is up there. What am I targeting? I'm targeting 1:3. All right. So right now we've already done. We did 1:1.8. All right. Before we had this retracement. So you know our price move. This is a breather. Price is moving. All right. Higher high, higher low, higher high, higher low, higher high, higher low. Then I expect this push to the upside. Why? Because this is what? Support. Did you see that? Price broke above this and came back to retest it. So we're waiting for this. So you can even go in again. If I have missed opportunity, if I want to stack in trade, I can also go in again here. All right, there's a bullish engulfing candle formed already. I can go in this trade and take another positions. Did you see that? Boom. Risking 1:2.9. Did you see that? Why? I could even see bullish engulfing candle. You can see this candlestick. This is a bullish engulfing candle here. This one here is a bullish engulfing candle. So this is how you make the market almost daily with this simple strategy. You can see what we have here. We have a double bottom here. We've missed this one. We didn't enter with this double bottom. Boom. All right. Now we have what? Price breakout and retest with what? Bullish engulfing candle. This is how to what? Make money in the market. All right, so I took the same setup again on GBP USD, all right? And this trade hit my TP straight up, you can see. We made 1:2 here, all right? I was initially targeting 20 pips. I was using 20 pips to make over 1:2. Did you see that? So right now, what did happen? So price had to come back to my point of interest here, all right? Yeah. And I saw the way price was bouncing off of that point of interest. Initially, we had this what? Double bottom here. Did you see? Boom. It came back again. We had a little bit of double bottom here. Boom. Then TP smashed. This is how you can make money in the market. This strategy works 70 to 80% all the time. And if you have a strategy that works 70 to 80%, that is enough for you to become a profitable Forex trader. So I hope this video was helpful. So thank you for watching to this very end. I'll see you again in my next video. Boom.